This is Mark Anthony with Mercury Time Price Analytics. Welcome to our end of day video update for Thursday, August 13th. So we had a little problem compiling the video last night. We didn't get that up on YouTube. So we're going to do a quick recap of what happened the last couple of days because it perfectly sets up what we're looking at now. The screenshot you're looking at presently, this is live. We're recording at 8:11 p.m. You know, if you're a chart geek, there's been so much going on the last couple of days. I mean, it's like Christmas Day every day. And what the S&P 500 is wrestling with right now is that you're back up into this level, retesting the key breakdown algo pivot levels from February 20th, which was the day you had the all-time futures high at 33.97. There's a couple of key levels that you want to watch. And let's see, do I have those? Yeah, I have those here. I'll give those to you later. All right, so let's take a look at some of these screenshots and bring you up to speed. A little housekeeping real quick if you want to get a hold of me. Mark Anthony at mercurysignals.com, our website mercurysignals.com, on Twitter at MC2085. All right, let's get this going. So this is a screenshot from the 11th. Our Mercury bands are calculated in the evening. We run the algo between 5 and 6 o'clock Eastern time because we need the full day data. Now, these Mercury bands are long cycle algorithms, so they give you very, very important price levels that that ES wants to gravitate back to. Think of it sort of as unfinished business or areas that had very high volume, and price always wants to return to those levels so that they can be properly re-auctioned. When you have levels that have very, very high volume, if all that inventory isn't properly auctioned, then ES is going to go right back to them. This level at 33.79, was it 33.79 quarter? This is a huge level, and something very interesting happened yesterday, and that's this. You came up here to 33.79, and this is yesterday, Wednesday. The high the day before was a tick below that. Now, think about this for a minute. It's middle of the week. It's Wednesday. It's 2 o'clock when this happened, and these are 3-minute bars. So this is right at 2:03 is this bar. Okay. So think about this. You print a new high for the week. Now, what usually happens when you print a new high for the week? It goes higher, right? It runs stops because people that are short will typically put their stops above the swing high. What better swing high than the prior high for the week? So you go up here and you make a new high by a tick, and then nothing happens. And then it goes sideways for almost an hour. There were actually a couple more bars after I did this. I mean, this was 50 minutes of this, what I called stasis. Now think about this. You're telling me that the largest, most heavily traded equity futures contract in the world made a new high for the week and then stopped and didn't go anywhere for an hour. Now, think about this. If there was a bid underneath these prices that was going to take it higher, would it have stopped? I mean, it's not, look, we know this market is managed. I'm not going to use the word manipulated. It's managed. Okay, forget about the word manipulated. Don't get mad at the market because it does things that maybe you don't expect. The market is manipulated. There's a quote that I have, and I remind our members of this all the time. This is their casino. We just get to play in it every day. And, you know, I don't mean anything conspiratorial by the word their. It's their casino. Who is they? I don't know. But, you know, I'm just an individual trader. I've been doing this for 38 years, but I'm not an institution. I'm not running billions of dollars. So if they, quote unquote, want to hold the market in place for an hour at 2 o'clock, why would they do that? Think about that for a minute. What happens after 2 o'clock? The exchanges start to get an idea. Well, it's not an idea. They know what the order flow is into the close, And if there is a large order imbalance to either side, buy side or sell side, that inventory has to be paired off. Now, they publish the market on close imbalance, and I shouldn't say imbalance, they publish the market on close numbers at 3:50, 10 minutes before the close. But that inventory's got to be paired off. Let's say, for example, there's $1 billion to sell market on close. Well, they can't wait till 4 o'clock to deal with that. And by the way, that's why after COVID-19 kicked in high gear, when they closed the New York Stock Exchange floor, that's why you would get these crazy moves at the end of the day in the last hour where they would run in one direction or the other and they would just go. Well, those market makers weren't there on the floor, and one of their key functions is to maintain an orderly market, an orderly flow in the last hour. So when we saw that yesterday, I posted this chart on Twitter, I shared with our members that we were likely to see a pop or a drop at the end of the day, but you were likely to get a pop first. Well, that's what you got. Once they let this trade again, you got a pop and then a drop. What's important is where that pop went to. So this number here, now look at this closely. Daily bull bear pivot, not for today. And actually this was yesterday. The daily bull bear pivot was yesterday was at 33.47.53. And this is a screenshot into the end of the day from yesterday. Okay, so again, just to set this up, you make a new weekly high. You go nowhere for an hour. You get the pop and then the drop. But what's important about where this stopped, one of the key levels where price started to break down after it printed that 33.97 all-time high on February 20th, one of those key levels was 33.83.54. Now, I know the S&P doesn't print 54, all right? I get it. There's 4 ticks between each handle. But our algorithms output data to 2 decimals. So we went back and we looked at that before it got there, because I wanted to know where this was likely to stop, where it was likely to run into a problem, overhead supply, if you will, if it did break that 79.25. And by the way, that 79.25, that was our XSV6 algorithm on February 20th. 33.79.25. Price always goes back to the scene of the crime. Okay, so let's go to the next chart. NQ. Now, I'm going to show you a few more NQ charts, but I want to show you how extended it was yesterday, let alone today. Because today it went back to visit our old friend up here at 11,260. And that was just a picture-perfect short opportunity. But what I wanted to point out in this chart is here's yesterday's open, where you get like, what, 160, 180 handle move that started a couple minutes prior to the open. This is right around 9:30. So, and we're going to talk about NQ more in a minute. And by the way, if we post a lot of charts for the S&P 500, the ES futures, if you like to trade NQ, we have stuff that you won't find anywhere, and I'll prove it to you before this video is over. So moving right along. All right, this is a little tease. I'm going to show you what this is in a minute. How does this look for a swing trading algo? It gets short, or it gets long here, buy the dip, buy the dip, buy the dip, buy the dip, and the algo rolls over. And what cracked me up about this is at the point where the algo rolled over, it actually gapped through it, if you look closely. And we have some metrics that tell you, that confirm that right about here was the spot to get long again. And we've got another algo that if I overlaid it on the chart, it runs about like this. So you had opportunities to sell if you were short to sell into the rip as it went down. I'll show you this again at the end. This is something we've been working on for a while, and I think this is, if you're not a day trade type trader, you're looking more for the swing trade, the trades that you don't have to watch all day long. In 38 years of trading, I've never seen anything like this. We've been working on it for over a month, had a breakthrough on this yesterday. This was what it looked like when we put the formula on the chart. Now, the first thing we applied it to is NQ, but my NQ chart has levels all over the place. So this chart is actually the QQQ. All right, but this is a big deal. We're going to have more about this on our video update this weekend. And the cool thing about our service is we are constantly developing new algos, and whatever the rate is when you join, it never goes up. We've got members. We went live with this service before Christmas, and we've got members that were here from the get-go. We have added so many things, and their prices never go up. And that's our promise to you. If you check out our service, you can try it out for 2 weeks. It's dirt cheap. The premium you pay for every 2 weeks, it's ridiculous. But we constantly add new stuff, and we do not raise the prices for existing members. They never go up. All right, back to our regularly scheduled programming. These two levels at the close yesterday, I posted this on Twitter and gave it to our members. And our members always get stuff first, but I post a lot of these things on Twitter. And the reason for it is I post these levels before things happen. Because it's one thing to nail this stuff every once in a while. But let me share with you, our algorithm is the most accurate algorithm that's commercially available. And I will put it up against any institutional trading system anywhere, period. And, you know, there's documented proof. I mean, it's all right here. Here's the trade alerts for today. Where's the short I was talking about? 11,252. I was actually short earlier and made a nice profit on that. Got risk out, moved the stop to even. By the way, if you have a pen and pencil, write these down, folks. These are those three key levels from February 20th, 33.79 and a quarter, 71.75, 59 and a quarter. And you'll note tonight there's another, not as important as these levels here, but it's right at about 76.75. And price went up to that, dropped about 4 handles. They snapped it right back up, right back down. It's fighting over that right now. But this position was put on 4 contracts, took profit on 3 of them. And where is it? I mean, so far it was about, let's see, that piece was 68 handles. It was about 170 handles on the 3 contracts that I already covered. I carried one over, still have that one anyways. So we put these levels out, and these are real important. There is so much turf that is being battled over right now. And I'm going to show you our Mercury Algo regression lines in a minute. But I want to talk about volatility for a minute, because let's see, which chart is it? Okay. So people look at the VIX and they look at that as the volatility metric you want to watch. Hang on just a minute, folks. All right, sorry about that. We have a singing dog. I mean, literally, Mia is a singing dog. I'll have to record this and put it on the video, but when my son comes home from work, he comes in, he starts saying, "I love you," in this really high-pitched voice, and the dog does the same thing. And he just walked in the door, and he started in that, and when the singing starts, it goes on for a couple minutes, so forgive me for that little pause. All right, back to VIX. A lot of folks look at the VIX, the VIX, as a measurement of volatility. Remember, what that is a mathematical calculation of the pricing of out-of-the-money options. So there's other things that you want to look at if you want to see if volatility is expanding or contracting. But this chart makes the point, and this is a chart that I put together yesterday. So Tuesday and Wednesday. On Wednesday, the VIX, at one point, the VIX dropped 10%. But when I did this chart, the VIX was down 7.28%. Now, does this look like a 7.3% decline in volatility from this day to this day? I mean, let's go back to Monday. You had about a 50 or so handle move up, a 60 handle move down, right back up. If that's not volatility, I don't know what is. Let me give you a better expression of volatility. Is this it? Okay. Here's the thing about volatility. Volatility is only important as a second derivative, meaning volatility measured against itself. All right. And that measurement, that second derivative of volatility, it's called the VVIX. It's the vol of vol. It's the volatility of the VIX. This is more important. Now, here's what this chart says to sum it up. If you're long equities and you've got nice profits that have built up over the last couple of months, please trim some positions, take some profits. If you don't want to take profits, please do some hedging, because yeah, this can continue to, the S&P 500 and QQQ can continue to go higher. But if you're long equities, this is not what you want to see. So you have an algo crossover, number one right here. You have another one right here. Bubble here, this other one here. And you've got big time algorithmic support. When these algorithms cluster together like that, you have 1, 2, 3, 4, 5. Right in this little spot. That is going to be a hard level to break. Now, these will spread out again, but the point at which they compress, even though they're going to spread out and do whatever they want to do in the future, when you see these levels at which they compress, those levels, it's almost like the chart has as an algorithmic memory. It's going to be hard to break that. And if this VVIX wants to bounce, and I believe it found some support right in here towards the end of the day and closed about right there, this isn't good. Now also right here where the white line and the dashed cyan line come in, you've got confluence of a key intermediate cycle algo, this solid white line, and a very important long cycle algo. I mean, look at how slow this thing moves, this cyan line. Now, if that's not enough to get you defensive, let me show you some bond charts. And I'm going to start showing more of these, because although equity volatility can get nasty, bond volatility will rip your face off in the equity market. So this is JNK, the junk bond ETF. Now, I know what you're saying. Well, this is junk bonds. You know, they're going to go up and down. Wait a minute till I show you the high-grade bond ETF. All right, so here's junk bonds. This is the intermediate algo. It's a longer cycle. I also posted the shorter cycle version of this, which shows you a much more pronounced drop. But here's the thing. This whole move up in junk bonds, notice where it came down to today. It came down to this dashed yellow oscillator. See, algorithms are more about time than they are price. And if you're looking at this chart and you see the level it was at today, it would be reasonable to think that it was in a stronger position here than it was, say, here or here or here or here, right? The price is higher. It's not the way algorithms work. These are a reflection of time and price. That's the way algos are built, because time is not only circular, it's linear. It's called space-time. Einstein. Time is both linear and circular. So you don't compare the price level here and say, well, it's still stronger. I mean, it's stronger than it was here and here and here and here. No. Right now, up here, it's as weak as it was right here where it last came in contact with that yellow line. So there's your junk bond ETF, all right? No big deal. Junk bonds go up and down. Let's take a look at LQD. LQD is the BlackRock high-grade corporate bond ETF. High grade, not junk bonds, high grade. This is the short cycle algo. Now, you're coming down into this orange time price oscillator. These aren't moving averages. These are time price oscillators. It's a function primarily of time, but of course it factors in price. You can't even see the last time it was this weak. That's the short cycle. That looks nasty. Let's take a look at the long cycle. Again, now you start breaking this orange time price algo, and you start coming down to this bad boy, that's not good. And in the bond market, bond volatility is represented by what's called the move index. And although when you get crazy volatility in equities, it's not good, when you get crazy volatility in the bond market, in the move index, that's really not good. Now, does this mean you sell all your longs? It means you tighten your stops, you take a little bit of profits. If you want to continue to hold your current level of long exposure, you do some hedging strategies. But this is telling you there's a big problem. If you go on my Twitter channel, again, it's not Twitter channel, but my Twitter at MC2085, I also posted some bond charts. Take a look at the 10-year bond. It's telling you the same thing that this chart is, and it's telling you that something's wrong. Now, the last time we saw this kind of behavior in the algos in bonds was back in July, late July of 2019. Now, remember when the plumbing problems really evidenced themselves in the banks? September 15th, the interbank overnight effective funds rate went from, we'll say, call it 1 3/4 to 10% overnight. That is the lending rate that banks charge one another overnight. It's not the lending rate that banks charge Joe Bag of Donuts with 18 foreclosures. That's what banks charge other banks overnight. Now think about that. If you're demanding 10% to loan money to other banks overnight, that's not a good thing. Now in reality, it wasn't the banks that they were concerned. The banks weren't worried about loaning to other banks. The banks were very worried about loaning to hedge funds that were levered 30 to 50 to 1. They don't want to lend money to those folks overnight. And that caused the interbank overnight effective funds rate to blow out. And that, and as if that doesn't give you pause already, that interbank overnight effective funds rate, that is the one thing that the Fed is supposed to do. They do all these other things that arguably, are they in their charter? Should they? I don't know. That's a debate for another time. But that's the one thing they're supposed to keep from getting out of whack, and they couldn't. And what we're seeing now, I hope that kind of thing that we saw in September doesn't happen again, but the bond market is telling you there's a problem. What did you see this week? You saw bond yields. Remember, bond prices and bond yields go in the opposite direction. You saw bond yields hit crazy lows earlier in the week, and then they spiked up. And here's the problem. It's not, although the kind of low yields we've seen lately, although that's not a good thing, that's not the big problem. The big problem is when you get that a really massive push down in yields that then spikes. Now you have all these people on financial TV talking about a V bottom in the economy. How about talking about the V bottom in yields? That's not good. That's not good at all. So part of the reason I do these videos is because I want you to have this information so that if we're in a period of time like now where there's extreme danger in the market, I want you to know that, because they're not telling you that on TV. They're telling you that VIX dropped 10%, buy the dip. If we do get a pullback, it's going to be short, sweet, and we're going back to new highs. Okay, they may be right, but I got news for you, gang. The majority of these folks on TV, while they're telling you to be calm and buy the dip, back at their shop, they're selling the rip. So just know that. All right, couple more charts. Now we're getting into some pretty important stuff relative to right here, right now, today, and tomorrow. We've had more than a few poor action on Fridays. We may see more of that tomorrow. Now, I was talking about NQ earlier. So this is August 6th, all right? Before Globex that evening, I put out on Twitter a chart, and it was very clear that algorithmically 11,260 was a big level, and not only to watch that level, but you could see a big time failure at that level. So you had this move up into 11,260, consolidate a little bit, came up higher, and just got hammered. And I mean, you're talking, that's about 11,280 down to 11,180. Quick 100 handles down. Here's your retest. Now, this time, not only did it fail, but it wasn't a quick 100 handles down. It was a whole lot more than that. And then another failure, oh, by the way, at a Mercury band, and you had another spike down, and then another failure at the same Mercury band. You can't make this stuff up, folks. These Mercury bands are calculated. On ES, we redo them every night between 5 and 6 o'clock. And those Mercury bands, when we recalculate them between 5 and 6, because they're long cycle pivots, they run all through Globex until the end of the next day session. So they run all throughout Globex till 5 o'clock the next afternoon. Our NQ algorithm, we only do it once a week. We do this on Sunday. I say we, I do it on Sunday. And these are levels that we put out to our members on Sunday that are this accurate throughout the week. I mean, again, you can't make this stuff up. If you watched any of our videos before, our algo does this day after day after day after day after day. I mean, there are so many charts that we have posted on Twitter, and we're not cherry picking. You can't cherry pick and do this a dozen times a day. So there's obviously something to this. So when this came up here again, we put out a short for our members. We knew it was coming back into this 1160. I put the short out at 1152 because I didn't want to play it too cute in case it didn't get to 1160. Well, guess where this move went to? This move right here, this initial interaction with this level, one tick below 11,260, 11,259.75. It backed off and it came back up here. And what I did, and it's all here on the trade alerts, put that trade on at 11,252, took some profits on it, moved the stop to even, meaning the spot where I entered it. It came out and took the stop and took that trade all over again. So between those two trades, it was over 200 handles in NQ today. And NQ is $20 a handle. And the thing about NQ, and let me just pause here for a minute, because whenever we're talking about NQ in particular, I got to give you this caveat. Trading NQ is like catching a tiger by the tail. The only way that you can trade NQ is to not look at it all day long. I look at it a couple times a day, and not at regular intervals. I've got multiple computers on my desk, and I've got a lot of different things that I'm looking at. I've got 3 screens like this, all with different things. So you can imagine the number of algorithmic metrics I'm looking at every day. So notice I don't have NQ on this chart. I've got it on a computer on the corner of my desk. And I only look at it a couple times a day because the only way you can trade NQ is you have to be super, super patient. You can't sit there and be impatient, because the way you trade it, and this is the E-mini. On my charts, I have certain indicators that I'll put on ES, the continuous contract, and certain ones I'll put on the front month contract, and certain ones I'll put on the micro, so that way I can just call up that symbol and it's got a whole separate set. The regression lines, I've got these running on MES. But let me go back to that chart, because here's the point. If you're going to trade NQ, when you look over, and this is what I do, if I look over at my computer that's got NQ on it, and I see price coming up into one of these Mercury band levels, you know what I do? Nothing. Nothing. Wait until it goes to the next one. Because this thing will always go farther than you think. Always. So when it was coming up into this 11,180 today, not interested. Because if it goes through that, it's going to the next one anyway. And so that's the way you have to trade it. So this is a level we put out on 8.6 as the level to watch, 11,260. It failed once, 2, 3 times. Failed again there today. Now, can NQ go higher? Of course it can. But as of now, it has demonstrated absolutely that it is not comfortable at all at this point trading above 11,260. And a quick thing about Apple, because everybody's talking about Apple every day. And you know, the funny thing is, folks that don't trade Apple or haven't been long Apple tend to say nasty things. Well, that's kind of dumb. I mean, if I'm a trader and you're a trader, I'm happy if you have a good trade, whether I'm in it or not. I mean, it's kind of silly and petty to sit here and, you know, be jealous that other traders nail one and, you know, and you didn't. So here's the point. If you've been long Apple, God bless you. Awesome trade. Great run. My question is this. What good news is not already baked into the stock? Hugely positive reaction to the earnings report. Whether it's good, bad, or indifferent doesn't matter. The only thing that matters is how the market reacts to it. So great reaction to the earnings report. Stock split. 3 analyst upgrades this week. And today you had a successful bond auction. And so it went up and did what, 463, 464? Could it go higher? Yeah. But what if it doesn't? Remember prior to earnings when Apple traded 396 and everybody thought, man, I'm holding this until it goes to 400, then I'll take some profits. Which was likely the same folks that at 33.97 in February said, I'll take some profits when it hits 3,400. Well, it came within 3 handles and that was it. So Apple traded up to like 396, 397. And then before you know it, it's down trading 355. Now, I'm not predicting that's going to happen again. But if you're long, like I said earlier, take some profits. Or if you don't want to take profits, implement some hedging strategies. And watch, by the way, I'm looking over at the chart. Watch those levels I mentioned. I mentioned 3370, 3376.75, 3379 and a quarter. Looks like as of right now, it went up to 78 and a quarter. And I have a feeling this is going to be a wild Globex. One more chart I want to show you. Actually, 2 more quick charts. Is that the one? I keep thinking I'm missing one. Bear with me a second. Okay. No, so the last chart will go back to the live chart. All right. These are the Mercury Algo regression lines. And let me mention a word about WD GAN because we're getting comparisons with our work. Look, there's only one WD GAN. What I've been able to do by the grace of God with a computer, WD GAN did with a piece of paper, a pencil, and a ruler. All right. So I don't care how accurate our stuff is or how accurate it ever will be. There is and only ever will be one WD GAN. The reason I'm bringing this up is be respectful to WD GAN and his family. And what I mean by that is if you order any GAN material, order it from his family website, wdgan.com. Don't order it from other places because you don't even know if it's accurate. I don't want to get off on a tangent, but just trust me. And there's some really cool stuff that you can get from GAN's family publishing company that you can't find anywhere else. And when you look through his material, you'll see some things that look like these regression lines. Now, here's how regression lines are different than than channel lines. When people draw channel lines, they'll draw them across the tops and the bottoms. That's not the way you do this. The regression lines cut right through price. And what they do is they statistically eliminate the extremes at the end, because statistically this doesn't matter. And statistically this doesn't matter here. What the regression line does is it cuts through the meat of the move. Because what happens when you get these things above the regression line is you get what I call an algo hook. And then you get this. And then you get this. Now, here's the problem with this structure. Notice that, for example, here, here, and here, it made it all the way up to the regression line. And then it made it through, checked back a little bit, and then took off. The point is, the farther that these lines go in this upward attitude, the harder and harder it is for price to maintain its connection with the regression line. What these regression lines are, I mentioned earlier that time is both linear and circular. What the regression lines are is they're a representation of the fact that time is both linear and circular. Price is one dimension. It starts at 0 and it hypothetically goes to infinity. Time is circular and linear. And these things are just going to keep marching upward based on the time algorithm that I put on them. And there's a very specific formula that I have to do that. And so here's the problem. You had this move here, right here, and here, and here, that didn't make it back up to the regression line. This came close. No cigar. And so what happens is when you get these periods of repeated thrusts upward that cannot reconnect with the regression line, then you're eventually going to get one of these that doesn't come back. Now, these algo hooks, they found support at another regression line, and they eventually went higher. Here, 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 here. But eventually, they can't keep up. And there were regression lines, about 5 of them, prior to this. The same thing. Now those are off in the wild blue yonder, because eventually price couldn't keep up with them, and then it falls away. And at some point, it's not going to be able to keep up with this one. And then as these go higher, then it's going to start doing this same type of stuff, battling over these. And then eventually, as these go higher in time, it's going to fall away from those. And the same thing all the way down. Like I said, there's been, on this last move up off the intermediate low, this is about the 5th regression line. The other ones are, they're up here in the stratosphere. So this market is, there are no words to describe how dangerous this market is. All you have to do is think about those bond charts that I showed you. Real quick, if you haven't been to our website, it's mercurysignals.com. You can try out a 2-week membership. It is ridiculously inexpensive what we're charging right now. Prices are going up very soon. I don't know when. I don't get involved in the pricing because I don't want to know. I don't want to go and do a video because we don't come here and tell you subscribe now because prices are going up. If I share with you that prices are going up, it's because I know they're going up. There's a special offer that's probably, I think they're going to discontinue it at the end of this week. And what it is when you go to the checkout page, you enter promo code 40, promo code 40. It'll take $40 off the biweekly rate on your first billing. And after that, it's the regular rate that we're currently charging. So give you an idea, and I can't tell you specifically what the price is on this video, but let's put it this way. If you trade the E-mini S&P contract, the E-mini S&P is $50 a handle, right? For less than 2 handles, you can try out our systems, all of our systems. There's nothing a la carte. You can try out all our systems for a little over 1 handle a week. It's ridiculous. And to give you an idea, this is literally 1/3 of what we give you. There is no other system this accurate. There is no other system that gives you this level of information. I work 18-hour days because I love it and because I'm one of these goofy people that only needs about 4 hours sleep a night. And thank the Lord for that, because there's so much to do here. But really, whether you're a new trader, been doing it a long time, day trader, swing trader, ES trader, NQ trader, option trader. One of our folks who started with us about a week ago, all he does is trade SPY options. I don't know if that's all he does, but he trades a lot of SPY options, and he's really, really good at it. And the only metric you need to know is this single daily bull bear pivot that we put out every morning about an hour and a half before the day session opens. And you can trade the TAR out of SPY options. We put a daily bull bear pivot out for NQ. If you like trading QQQ, you can trade the TAR out of it with that one metric, and that's one of about 30 different things that we give you. So you have access to our live chart, which is a version of this. This isn't the exact one because I've got 3 of these. You get access to our Slack channel. I mean, just to have access to the charts that we post each day is 10 times more valuable than we charge you for this whole thing. So you have the live chart, you have our Slack channel. We've got these charts posted all day long. You get these Mercury band levels. Oh, by the way, the other day, when you had that low down at 33.19, this was put out the night before. Nailed it to the tick. Actually, it was to within less than 1 tick. You get our trade alerts. I mean, you know, there's so much stuff that we give you, it's ridiculous. So you can find all of that at mercurysignals.com. And lastly, if you want to get in touch with me, I would be honored. And if we can find the right slide, mercurysignals.com, Twitter at MC2085, or send me an email, markanthony@mercurysignals.com. We're going to have a really important weekend update, because there is a whole lot of stuff that is building to a boiling point. The weekly reports I do, I always put lyrics to a particular song at the top, and the name of that song is whatever the theme was. So the theme for the weekly report last week was Green Grass and High Tides. If you've ever heard of a band called the Outlaws from Tampa, here's a bonus tip for tonight. Listen to the Outlaws' first record. It was recorded, I think, 1975. And it is the coolest mix of Southern rock and bluegrass. And if that sounds weird, just trust me, Huey Thomason is a genius. Listen to that record. The Outlaws' debut album, I believe it was 1985. It was just called Outlaws. We used the Queen David Bowie song Under Pressure before. I don't want to reuse that, but it may be a takeoff on that theme, because this market is under pressure. So with that, I want to thank you so much for your time. Went a little bit longer tonight than we anticipated. As always, and most importantly, God bless you. God bless your family. We hope to see you again real soon.